Welcome to Markets Now. I'm Michelle Rook with Dwayne Bussey of Bolt Marketing, and a higher close on Tuesday with the exception of the hog market. And Dwayne, corn market, we made some new high closes for the move here on a Tuesday. And let's talk about where you think we go next. Are we trading Argentina weather, and will the funds keep pushing that market?
Yeah. Yes, I think we are trading that Argentina forecast. You're right. Pretty hot and pretty dry. And the forecast has always been dry for Argentina, but it seems like every time I look, they get some surprising rain over the weekend. But now the hot is mixed with, or the dry is mixed with a very hot forecast too, and it's spreading into southern Brazil. When we come back from this holiday, if the forecast is still like that, I think you will start hearing some people starting to trim back Argentina's soybeans and corn production crops. So yeah, I think that makes it really easy for the funds to buy. We've seen on the Commitment Traders report that funds have been aggressive buyers of corn. Remember, they were unbelievably record short in September, and now we're talking about them being long and questioning how long they want to be. But as a producer myself, I think it's fun seeing the rally in front of us here.
So new high close for the move, as I just mentioned. So where do we project to now? Where's the next areas of resistance, or when do you think farmer selling will start to kick in?
Well, I'm glad you brought up farmer selling, because I think they've been a little absent here the last week and a half. Farmers like to take some time in December, square up their financial books, figure out their taxes, and to make a bunch of new sales here the last week would obviously skew their tax plan. So I think as the funds have been in here, been a big buyer, that natural seller, which is the producer out there, has been absent. That's why it's been easier to go up and make these highs. Technically, we just closed above the 50% retracement level. Next level there would be 61 or 62%, which is 468. I think you need to scale up sale from here. I'm targeting like a 475, 480 price. And honestly, Michelle, we get to there, I'm dumping all my corn in a heartbeat, because I don't know. We still have plenty of corn in the U.S. I do like the demand story. It's a good story, but boy, this is the highest we've been since May. We got to start rewarding the market.
Let me play devil's advocate with you, though. Is it possible to get to $5? Do you think if we start seeing that ending stocks number on the final report here next week, if that would drop below this 1.7 that we're currently at?
Yeah, I've heard some market talk that the USDA report, we're starting to think the ending stock is going to be below 1.6 billion. And honestly, my first reaction when I heard that was, well, wow, I'm glad the market's thinking that. I'm going to be selling before the USDA report then. But as I did my own research on that, it's not that hard to get the ending stock down to 1.6. I mean, for example, I can see ethanol demand being up a little bit, export demand up a little bit. And I know they increased those demands the last report, but we're still on a very good pace there. And if you tweak production down just even another, tenth of a bushel, boy, all of a sudden my ending stock is at 1.6. So I'm starting to be a believer in some of that story there, which, man, Michelle, we came from a long ways. We went from 2.1 billion to 1.6 in a heartbeat if that does happen.
No doubt. It's been incredible to watch that shrink, that ending stocks number. All right, so soybeans had a nice close today. We got March above the $10 mark. We got soybean meal above the 100-day moving average. Is this end of the year short covering, or are we putting in Argentina weather premium in there?
A little bit of both, but I'm going to lean mostly on the end of the year short covering. And I started to giggle when you mentioned that, because I do feel bad. Every interview, radio, TV, whatever I've done lately, I've talked about this profit taking at the end of the year, holiday trading session. And it sounds like a lame excuse, but Michelle, it's a real big part of our trade. We got to remember, and you just got to look at the Commitment Traders report, funds were record short soybean meal. And if you get that combined with a little bit of Argentina, who we remember is a big export of soybean meal, weather story out of Argentina, that's just enough spark, and boom, all of a sudden we're up 18 cents in raw soybeans, and soybean meal looks to really put in a nice bottom here. So I think you really got to remember these funds and where they're at. And if I was short and making some money, I would sure like to bank some profits before the year end.
Well, and to close meal above the 100-day moving average here today means that the funds are going to be underwater. Are they going to start covering a bigger part of that short position? How much of a rally could that continue to produce if they do that in soybeans?
That's the fun thing about every rally, every uptrending market starts with short covering at the bottom. And if you can get short covering on a day like today where the volume's a little bit lighter, there's not as many traders there, maybe producers aren't the heavy sellers, all of a sudden then you make some chart damage to a bear anyway. And now the chart looks a little supportive. So then the funds come back next week to work, and then they don't like the way the soybean meal chart looks. So then they flood the market with get me out orders. And so I guess to answer your question, I think we can go quite a bit higher in soybean meal. I've always kind of thought we were too low anyway. Right now, Argentina doesn't have a crop made yet. Brazil's crop is going to be big, but we're a ways off yet. I mean, I don't think it's unbelievable to think that the funds could cover their short positions and we could be at 350 for meal.
Yeah, and you got to believe that you got some end user buying, value buying at the lows here, and maybe still see some of that buying as we go up if they're concerned about that. Okay, so the wheat market, what do you think there? Again, end of month, end of year, end of quarter short covering here today, a little higher?
I'm afraid so, because the news really isn't that breathtaking when it comes to wheat. I've been trying to talk up the smaller Russian crop next year in the wheat market, and that doesn't seem to rally. We do have some cold weather coming, but I kind of grin even when I say that, because the winter kill really shouldn't be an issue or concern. Give us a couple of cold snaps and maybe some ice or something in the southern plains, and we could talk some winter wheat damage, some winter kill. But right now, no. To get back to your question, I think this is a whole lot of just end of the year profit taking, and honestly just following corn and soybeans too.
Yeah, no doubt. And I know that we have been kind of following European or Matif wheat at some point as well. Actually, we seem to follow that more than trade the Russian export news, don't you think?
It is funny how we do that. And sometimes I wonder who's chasing who, because it feels like Matif is following us when you read their news, and then we're following them. But yeah, Russian wheat export prices are actually up a little bit this week, but didn't seem to matter.
Yeah, it's not helping too much. Okay, cattle market, what do you think there? We had 6 weeks of higher cash trade. That seemed to be a supportive feature for the market, but we haven't seen any cash trade this week. So where did the rally come from in the cattle market today?
I think they're anticipating the same thing I am. I think you're going to have cash cattle trade eventually higher this week, and maybe it sneaks out moderately higher too. You finally got full weeks now moving forward, no more holidays in there. And I think you've got feedlots that are fairly tight holders of the supply they have right now, not because they don't like the price so much, but I think what they don't like is the price of the feeders to replace that pen once they let them go. That's going to be expensive. So I think they want to make as much as they can on every pen. And also you got the weather we talked about. Okay, the winter wheat thing I don't think is a big deal, but I think you get cold temps, we could finally see that carcass weight dip down a little.
So you think we're putting a little weather premium in, because we don't really have any in this market?
No, we really don't. We're still at a discount to cash. So, now one cold snap, guys are set up really well. I don't think it's a big deal, but you tack on another one afterwards. Let's say the second half of January, there's some moisture, some ice, and more cold. Well, then those carcass weights could start to finally get a little bit more normal. And if that does happen, I think we really could see cash cattle explode. But I laughed a little bit earlier when I told you, I got 8 ifs there in that statement, but that's a typical broker, I guess.
I know. All right, what about the hog market? Another down day here today, and we've done some technical damage. I think Fed is still holding on to the 100-day moving average, but do you think the funds just keep liquidating here?
I do. I've been harping on the whole end of the year profit taking, and this is probably the biggest case of that. Kind of upset with myself being a little bit of a trader that I always wanted to be short hogs, knowing that not only index fund, but managed funds as well were both record long, and not like just by a little, by a lot. They were record long this hog market. Now, they got to get out sometime. I'm shocked they didn't get out before Christmas or during the Christmas week. It's all of a sudden this week they decided to get out, and that broke the neckline on the head and shoulders formation. So now the chart looks bad there too. And to me, the cash market is holding together just fine, but this is classic case of funds hitting the get me out before the end of the year.
So since you mentioned that, what happens after the first of the year? Do we get some rebalancing of all these portfolios or what?
I am a believer in some of the rebalancing, the index funds, the long only funds that are in positions a long time. When you look at the numbers and where everybody's at, it actually makes sense what happened the last couple of days. To me, they'd be buyers of almost all commodities except for lean hogs. They should be a seller of that. So we might have already seen a little bit of it, but I think you can see more of it when we get into January.
Yeah, especially if the equity sector continues to correct. That'll be kind of a key for money flow, don't you think?
Yeah, it sure will be. And as producers, we have no problem with that. They can come over and trade our commodities. That'd be great.
All right. Thanks so much, Dwayne Bussey with Bolt Marketing. That is Markets Now.